This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Chris Kline, who's the Chief Operating Officer and co-founder of Bitcoin IRA. Chris, great to have you on the show.
Hey, thanks for having me today. It's a real pleasure.
Chris, I'm certainly very curious about the services that Bitcoin IRA offers, and I want to dive deep into that and what you guys are doing. But let's start with your background. Where are you from and where'd you grow up?
So I hail from the fine, hard streets of Aurora, Colorado. So I grew up in Colorado. I lived in the Eastern Plains, went to college in Boulder, CU Boulder, and then left Colorado for California with a one-way ticket in a suitcase about 10 years ago. So I graduated college right around that time when the last recession occurred, which we made it pretty difficult to find jobs, as most people know. So I bounced around on incubator startups, and then I came out here and I've been working in fintech, specifically in retirements. I met my partners a while back and we went on a mission together to help more Americans retire. And we've done it in a lot of different ways over the years. Our most notable and recent is obviously Bitcoin IRA.
And what was your first encounter with Bitcoin? Yeah, I'm always curious about that. Did a friend tell you about it? Did you see it online?
Yeah, so no, we were actually sitting in our boardroom, which I'm in today, in 2015. So end of year planning, prepping for the next year. We were working on all kinds of things in IRAs, alternatives, private equity, real estate, LLCs, precious metals. And in that meeting, the concept of Bitcoin was brought up by one of the partners. And I was like, what? And so, of course, my curiosity got me way down the rabbit hole. We've spent the next year building the first solution for retirements in crypto savings.
Wow. And that's pretty amazing. You guys were doing that back then and so early, because now it's like, okay, we get it. There's Fidelity talking about retirement accounts, putting Bitcoin in retirement accounts. But back then, you guys were certainly trailblazers.
Yeah, it was a forgiveness versus permission kind of thing. So we had been working with the trust custodians over the years. We had a good reputation, and we had went to them. I actually flew out to their board and met with them and showed them how the process works, gave them as much education as I could, which at that time, just even finding a lawyer to work with us or a bank that would work with us. It was very fresh, trying to put traditional finance together with crypto and DeFi. That was a fun ride. But once we got it through, everybody I think has been pretty happy that we went for it.
For sure. And I always ask all my guests, what do you hold in your crypto portfolio?
I have a lot because I'm the tester. So we have 65 different coins on our platform. I hold all of those. I would say my largest are Bitcoin, Ethereum, and I'm a big fan of long-term holding for gold against currencies. But the annoying part is that most gold comes in bars, coins, etc., and you got to ship it, store it, logistics. Pax Gold is awesome. And so I use them in our portfolio as well, digital gold, so that I can easily go to the sidelines on altcoin trades or otherwise, not back to the dirty dollar, but to something I trust a little bit more.
For sure. Tell us about Bitcoin IRA. How does it work? What are the services you offer and what are the benefits, given that, folks are usually using exchanges and they could also go through like Robinhood and so forth. But certainly using an IRA, there's huge benefits, and I want to make sure that you highlight.
Yeah, obviously, for your audience, we're all believers in crypto, right? Or we're and probably not tourists at this point. We're probably true believers at this point. And so what we built was the ability, if you really believed in it and you saw potential in it 5-6 years ago, why not put it in your retirement account? Because then you have all those tax shelters of a typical retirement account. You can have a Roth, a traditional, a SEP, or a simple. And so what we built around it was a turnkey solution that connected folks with the right wallet solution, the best and brightest over at BitGo, top security, which eventually evolved into top insurance and everything else. We went to OTCs, so groups that aren't directly hot exchanges, where we could actually execute trades and then settle safely cold storage to cold storage, which is huge. And then obviously you needed to have a bank or a custodian. And we were working with several at the time. Since then, we've actually built our own because we realized there was a lot of knowledge on how fast crypto could run. And some of these banks aren't that fast, right? That's just what we know about banks. And money moves slowly. But when folks are really excited about it, they want to open, fund, and trade an account very easily, right? That's what we're all looking for. And in an IRA setting, our platform, mobile or desktop, you can log in, create an account. Once you open it, then our team will help you actually move funds. There's 3 common ways. People will either use transfers from existing IRAs, they'll roll over from like an old 401k, past employer kind of thing, or they're just starting fresh and they're going to do a contribution or monthly contribution of some sort for the year.
So walk me through the step-by-step for like someone who's new to all this. Maybe they're a bit younger, they haven't explored retirement options and things like that, and IRAs and so forth. So let's say they want to invest in Bitcoin and maybe they have some already on another exchange and they sign up for Bitcoin IRA. What would be the next step, and how would they do their contributions and so on and so forth?
Yeah, it's very similar to what you would do with any other type of IRA. The specialty here is the asset in which you can hold. So you can hold Bitcoin, Ethereum, others. Now, when you're opening one, there's a lot of different options. If you have a 401k which is very common, a lot of younger folks have maybe changed jobs and didn't realize that they have funds sitting at their old 401k they can put into an IRA. That once you open the account, our team will do all the KYC, AML compliance. It's very robust. Once that's approved, then you will be able to wire funds, hook up a bank account, any of those types of options to be able to pull funds from one of those places and put it in your IRA. Now, the setting is really your own dependency. There's the 2 most popular are traditional and Roth. Traditional is tax deferred. Roth is tax-free growth. And what that means is you can put, say, $6,000. So if you made $100,000 last year and you put $6,000 into your retirement, then it would lower your taxable income by $6,000, making your taxable income at 94 or wherever it was at that point in time. Everybody's different, right? And so that's nice because then you can buy, sell, and you don't have the implications of cap gains, right? You're trading, you're in your IRA. The next time you pull it out is when you reach 59 and a half or 70 and a half when we get really old. And we start taking it out as a distribution. And then you're taxed at that point in time. The Roth is the opposite. So you pay the taxes before you put the money in. So it doesn't lower your taxable income. You don't get that reward on the front side. But at the end, as you distribute, there are no additional taxes. So if you think something like Bitcoin, which we had clients buy $200 of Bitcoin, the first ones, held that until even through the peak, even now in the valley that we're in this lull, it's all tax-free growth, which is huge. So that's really specific to the IRA. There's others. If there's a lot of self-employed folks out there nowadays. This used to be not as common, but a SEP IRA is used by individuals that are self-employed on their own business, and you can set one of those up. And then there's a really rare one called a simple. Some small businesses use that as like a pseudo 401k. They only have like, say, 7 or 8 employees, and to go and get a whole administrative package costs probably more than something as simple as a simple IRA. And that's where that came from.
Very cool. So let's say Bitcoin's at 21,000 today. I transfer 21,000 into my account, and I make that purchase of Bitcoin through the retirement account, and that grows over the next let's say 3 years, Bitcoin goes to 150,000,
Okay.
and I can I then take that out without hitting the taxes? I know you layered out different options.
It depends on your age and your
Okay.
situation. So you should always, before you take anything out, but what you can do is you can liquidate that Bitcoin. So say you're like, hey, you know what? This is enough for me. I'm going to sell this off. And then the cash, the proceeds will land in your IRA account, staying inside that tax shelter. And then you can take it and do things like gold, real estate, stocks, bonds, mutual funds, the whole gauntlet. You can continue to build up your investment portfolio.
Got it. Or just leave it in there,
Yeah.
and when I'm ready for retirement, and just let it grow over time, right?
Yep. Exactly. That's
Uh,
why they call it our nest egg.
that's great, and I think more folks need to look into these options because, just speaking from personal experience, capital gains tax, in my opinion, is highway robbery, but it exists. um, and I've been hit hard with taking profits in crypto over the years.
Yep. All of us have dealt with it. And you know, it's part of the glutton for punishment, right? With success begets those things. But it's one of those things, just reality.
For sure. So I know a question that it's going to come up given the climate that we're in right now,
Mhm.
with certain companies and having liquidation problems and so forth. Folks are going to want to know your security, your insurance, and how you guys maintain your books. And that's going to be an important question for them. Can you tell us a bit about that? I know you mentioned BitGo.
Absolutely. I'm really glad you asked that because in this climate today, it's important more than ever that you understand where your coins are, who's responsible for them, what can happen to them in an event of a lot of things, right? So what we did was we saw that exchanges were all hot exchanges, meaning that your assets are sitting in a hot environment. Now, the risk 7 years ago when we built this was hackers. A lot of exchanges were just starting to get built. They were vulnerable to attack because there was an asset behind them. And even today, I think last year we had a pretty big one on exchange attack because what happens is the exchange gets attacked and then thereby you're at risk. And if your wallet is somehow part of the attack, then assets are probably gone. That's usually how it works. Or they've SIM swapped you personally, and your Coinbase or something is sitting on your phone, and now they've been able to move it out. There's a lot of infirmity. So we had to put that behind a moat, a giant wall, a drawbridge, all these types of things because insurance didn't exist 6 years ago. So we worked with our friends at BitGo and we said we need multi-signature custodial situation wallets. And we built out the administrative controls so that we could bring in assets. And if we needed to move them, we'd take a series of steps, which first starts with, if it was you, we'd be actually doing a video verification call. So we'd be on the phone together like this, going through your personal information, et cetera, before we even started the process to make sure it's you that really wants to do this. And then once it moves forward, there's a series of signatures that take place on both our side and BitGo's side. And then inevitably, there's a final call with the insurance, which kicks in so that if any assets are moving, then there's an additional transaction process that's taking place. And then what that all did was 5-6 years ago, we built this, we refined it, we got it better and better with BitGo, and they are amazing. They carry 30%, I think, of the world's Bitcoin at this time, and are responsible for, it used to be like 20 billion a month in transactions. I think that's gone down, obviously, just because values have gone down. But what happens is your assets are sitting there, and that creates the ability to go to a Lloyd's of London or a Chubb or one of these large underwriters and say, hey, this is how we do the process. Can we get insurance? And this is how our wallets work and how they're segregated in cold storage and how keys are geographically dispersed, like all the layers, right? I can't get into all of it because somebody will get mad at me if I tell it. But you can imagine that you've got some wicked nerds that are sitting a long time ago knowing, hey, we're not just doing crypto, we're doing crypto in retirements, which means that we have to be even more careful and we have to have them behind more and more layers of security. So that's the first step. And we have, I think, right now it's up to 700 million per wallet. So unless your wallet gets that high, you're in a pretty good place with our configuration. I hope everybody's does though, obviously, right? But then the next layer of what we've learned in the last 2 months, and even maybe before, maybe earlier this year, when the Coinbase BK terms of conditions story came out, when people started to realize, wait a minute, that can happen, and there's reasons why it can happen. I think you're seeing a lot more folks make decisions that are aware and understand it to move off exchange, right? They're grabbing a hardware wallet or they're signing up with another cold storage provider. There's plenty out there now. to at least if they're long-term hodlers and they're not doing it, that's where they're going to go. And then you have this business risk that people didn't think about. So if you work with groups like what we saw has happened with Celsius, with BlockFi, with even with Coinbase is healthy. There's it's all just terms and conditions situations right now. But when all these businesses start going on a growth by any means necessary, which is basically the mentality of crypto for the last year, everybody made a whole bunch of money in 2021, right? And now they think they got the Midas touch, and they're going harder and harder, and they have taken in capital at rates that they have to fulfill huge growth factors. So it makes them have to take tough decisions, or they've offered out unreal yield offerings, right? There was 18%, 16%. So you've got these businesses that are making decisions in an unregulated, there is some, but not very much, environment in DeFi. There's oversight, but there's really no regulation, taking decisions and getting themselves locked up in a liquidity pinch, which has happened to banks. This is why the FDIC exists. This is part of what happened in 33, right? Or 29, and then all the way through 33. But so that's a huge new thing. And that's where you have to understand the setup you have. So the way our custodianship works is that these are all self-directed. The client tells us to go capture the coin. We bring it into the wallet. We have storage of it, cold storage segregated. Unless the client tells us to do anything with that coin, we're not doing anything with it, which is important, because what these folks were doing was they were trying to make more and more yield. And if you're a crypto guy, you could go into some really deep spaces to find yield if everything's peachy. But when things turn the other direction, when price volatility turns against the market and people want to withdraw, this is what happens in these markets, and they weren't ready for it.
Yeah, and I'm glad you mentioned that you're not using those tokens to do anything, lend it out or whatever, right? You guys, it stays put. You're using a quality custodian, BitGo. I've talked to Mike Belshi, the
He's
founder.
amazing.
Yeah, he's a great guy, internet.com Netscape guy, right? And then you have insurance. So I think those are three major prongs there. And that's great to hear, because like I said, a lot of people are going to have those questions given what's been happening.
Some of my favorite early moments in this industry was sitting in a room in Palo Alto with Mike. Just the energy that happens in this community is, and this was 7 years ago. There's so many more people in this community now, but when I'm coming from a financial services world, he's coming from a security world, and the way that our minds were working on, okay, I've got to make it fit in this box. You want to check all these boxes. How are we going to get here? And it was just so much fun to do that together.
For sure. Now, I think you mentioned, and I saw it on the website, you guys offer about 60 plus crypto assets. And I'm assuming the plan is to continue to add, relevant assets, of course. And, is there a process as to, like, for example, if any coin was to have some security issue, like a Terra Luna, I'm assuming how do you guys handle situations like that?
Yeah, situations like that. So obviously we didn't have Terra Luna on our platform when that happened. We've been criticized for it a few times, but we've never done any stable coins. We never needed to. So we were never too far on the cutting edge the only time I've ever used stable coins personally was before it was on a major exchange. I would take US dollars and turn them into USDT or US whatever, and then flip them into something so that I could go buy coins that I couldn't get USD paired, right? That's what I used them for. The growth of those, and they have a purpose. They're a segment of this market. I think people thought they were everything in the market, but when that happened, but they're a segment of this market that was still definitely has, I think, a lot more regulation and a lot more definition to it coming ahead. But in that situation, we weren't involved in that one. But what we do in order to pick a coin, so to speak, that will be on the platform, the first question is security. Can we keep this asset safe? Does BitGo offer us the support that we need to keep this? Can this be insurable? Or what are the parameters? We sit down again in that same room with Mike and have conversations about the assets. Then we move forward into liquidity. Are there enough OTC exchanges that are offering liquidity on this coin so that if somebody was to get the asset and then 6 months down the road want to sell it, we're confident that that'll be there. Now, we've been through our own trials and tribulations. Ripple, everybody got affected by Ripple a few years ago. What you do is you have to tell the clients, hey, this is coming. This is about to happen. You can choose one of two. This is self-directed. Do you want to stay and see what happens with this, or do you want to just sell now and move on? And there were people that stayed. There were, and they're still, and they've gotten, fortunately for them, we've got airdrops that have taken place. A lot of those assets have no liquidity at this point, so we still have to figure things out, right? It's still fresh. Another time with forks, when those things happen. So we've supported BCH, BTG, BSV. Sometimes those assets start to become a little bit more illiquid. Like BSV is pretty illiquid in the OTC markets nowadays.
Right.
There's just not a lot of buyers for it. And BTG's kind of got the same thing happening, right? So it's a series of checklists we go through. And then now that we are our own vertically integrated trust custodian bank, we are able to think through things from that perspective too. Work with the compliance team. They want to understand certain levels of things. And usually, I mean, that's why it took us a while to get to 65. We were, first was Bitcoin, then May of 17 was Ethereum. And then we moved forward there, probably got to about 20 coins maybe in a few years by the end of 19. And then we did a large add-on last November. We just had a lot of clients that they were making a lot of money in their Bitcoin. Usually what the pattern is I take my profits here and I take them into alts and I see what I can do with them. And so there was a lot of questions. So, and that's our goal. We're always evolving as a tech platform, which is something you have to do in this space. You can't rest on your laurels and say, oh, look what we created last year. Right. Nobody cares. It's now, what are you making this year? Right.
Oh, yeah. and on that note, about you not resting on your laurels, are you guys doing anything with NFTs? And I know that's still in its early phases, but
really fresh. Well, the thing with NFTs is it's very funny with IRAs. There's a couple of rules on what you can put in. There's not many, and specifically listed is things like prohibited items are like art, collectibles. So we are in the process of having the conversation with regulators and operators and legal to say, hey, what does this look like? And how does this work? We've had folks come to us for custody of them. You obviously not in an IRA. We service non-IRA accounts as well. So those things to add that additional. But man, that's a space where I think DeFi's, the lessons from DeFi's stumble will hopefully be applied in NFTs growth. And what I mean by that is 2 years ago, DeFi was nothing, right? Everybody was just kind of scratching the surface on it. And then it just exploded. And what we got ourselves into this year is where certain actors were making decisions that are going to hurt the overall market. Luna, Celsius, these are going to hurt the overall market. I hope that as NFT grows, we see the same thing. Now it's had its problems too. What the Ape Club, I think I always say it wrong, but because it's
Bored Ape Yacht Club or something like that.
Yeah, the board, those things tanked in this market condition too, right? They're very bad. So it's now what I love about NFTs, and I saw this the other day on LinkedIn. Salvatore Ferragamo, the shoemaker or fashion designer, they decided that they're spending some money into it. Now that's a smart application, because what I really see as NFTs and the metaverse and this marketplace of the future is that, how kids stunt. I mean, we probably did. We always, they got the newest thing, the coolest thing. They want to show off the news, and Instagram and all these are full of them. There's going to be a point where there's a finite nature. There's only so many of those sneakers, right? Every time there's a sneaker drop. But imagine if there's an NFT drop that's associated with it, that builds up towards it. It's a great marketing tool. It's a great asset that somebody can hold and say, hey, I didn't get the Jordan Air Force 27s, but I got this, and I signed, and this, and that. So that's going to build that. And I think these brands, you see Nike, Puma, Reebok, all investing a lot into it. Now, some investments are going in, like some of these banks that are going in, I think they're just looking at potential for yield on it in some way or some sort. I don't know if they fully understand what it is. One that I was watching a documentary, not a documentary. I say documentary. I watch a lot of documentaries. I was watching a YouTube last weekend. And there was a conversation about Gala, which I thought was pretty interesting, because Gala is a token that'll come out, or it's not an NFT, but I think it'll be in the metaverse space. Farmville's creator, and we all know Farmville because it took over the world for a generation probably. Everybody knows Farmville. Those guys, Zynga, I think is their name, are dabbling in this space for gaming, online, and metaverse and tokenization. And if anybody's going to figure out the piece there, that's pretty cool to me. I thought that was pretty interesting that you see these evolutions happening. But again, that's a space where I would say we'll get back together in a couple of years and it will have a lot more definition to it.
Yeah, it's still very early, and like you said, we're still trying to figure out a few things, especially the vulnerability that was exposed with the Bored Ape Yacht Club. I almost forgot that.
What scares me the most about them, honestly, is that when folks come in that are brand new to crypto, because there's so much robust marketing in those spaces, you
Hmm.
see that they don't make, obviously, if you're just getting into crypto, I think anybody in the crypto space would tell you to start with Bitcoin. It's you actually have them in order behind you: Bitcoin, then Ethereum, then Cardano, right? You lay your way through those. Those are the dominant ones that aren't some kind of rug pull or some kind of other thing that you're not doing your due diligence on. Now, as you get more sophisticated and savvy, then you can start looking at those options. But that's the one thing, because you see it's just so much marketing, and that people, when they were coming in 2017, I remember this. Bitcoin had ran to 20 from Thanksgiving to Christmas, basically, right? And everybody was looking for the next yield, and people were convinced that Ripple was going to become the next Bitcoin. And I just shook my head. Said, you got to understand the utility of the token, the utility of the coin here. Ripple XRP is designed so that it can replace bank processing. Well, if it costs $30,000 for a Ripple, it's defeated its purpose. It's supposed to be more effective. So really, its cap of a value is somewhere about what it costs for a bank wire, if you want to look at it relative, right? So we couldn't go much. We were at 5 at the time, and people thought it was going to 100. And I was like, guys, it fits around. It's supposed to be around pennies. That's where it's supposed to be if it's going to be competitive in its utility. So that's just something big that I always try to talk about.
Yeah. And honestly, I don't own any NFTs yet. I'm still trying to filter through the noise to see what position I want to take. So, to your point, I can imagine, on your end, you guys are still trying to see how you can support this and make sure,
Yeah.
you have all your ducks in a row.
When your mission is to help more Americans retire, you have to make prudent decisions to
Yeah,
help. Yeah.
absolutely. So on that note, what's on your 2022 roadmap? And I know we're halfway past the year, right? The year's almost halfway past done, or whatever you want to call it. Anything you can drop a hint on? I know probably there's things under wraps, but curious what you guys are working on.
Yeah, so we're a very healthy, robust company in this space, and we have been focused. We've been moving so fast for the last few years. We built the first trader, first mobile app, first this program, adding coin, like just boom, 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 boom. And what gets kind of forgotten when you're doing that as a development process is you're going with the client-facing component first, right? You've got to make sure that your portal and your trader and your self-serve and all the things that face the client are the most powerful. And behind the scenes, you kind of are putting ropes together as the ladder climbs, and how these dots connect with these dots, especially when you've got traditional trust banking finance systems, and you've got our back-end traditional software as a service systems that have to work together. So what we have been focused on this year is buffering, polishing, discovery on where can we be better, filling those gaps, really making it so that the next big wave, which crypto, we've been through 3 of them now as a platform. When the next wave comes, we're ready to take on even more and help out clients even faster and have better service and have better tools. So a lot of it is not the stuff we're going to do headlines about, right? It's not going to be the Bitcoin IRA does the first this. It's the stuff that doesn't, but actually probably has a bigger impact. Beyond that, we have a couple of big hires that we have. I can't say any details, but we do have somebody from traditional finance, a big name that is coming to join us, which we're really excited about. That'll be in August, I believe. And I think for us, a big thing this year is to kind of watch as the consolidation happens. You see what FTX is doing. They're kind of becoming the Rockefeller of the crypto years. And the blood is in the streets and they're buying. We don't have that big of a war chest, but there are strategic partnerships that can be found in these types of markets where traditionally where you thought you were competitors or where you didn't think you had any collaboration, where you find, hey, in this market condition, we could be helpful to each other. So we're keeping an ear to the ground for that.
That's awesome. You mentioned we're currently in the bear market, and I want to segue to the market at large. I think a common question everybody's asking is when will the pain end? Right? For some people, it's their first go around with a bear market. It is my second, but it seems like a lot of things are dependent on the Fed. and all markets are suffering right now. And there's been a high correlation between the stock market and crypto. So, what's your outlook on the bear market? Are we here for another year? Then we start moving upwards? And I know that's a hard question. That's like asking what's the lottery number next week, right? So I
They
would love
do
to.
get traditionally shorter. So the one thing I can safely say is that the bear markets traditionally get shorter each time they occur. If you look at the data, I think the last one was like 184 days, which the one before it was like 220. So they go down about 20-30% each time in their length. This is my third. Well, actually, I don't even know. I'm like a kid that was born at the perfect time with the weird time, because I've seen .com boost and bust and boom, the towers fall, the houses burn, and then COVID now. So I'm wise beyond my years for the years that I've lived through this world, which is fun. So overall markets, this is a little uncharted territory. We have now put ourselves, economically speaking, against a little bit of a wall, and between a rock and a hard place for sure, because we started in 2008 with QE, quantitative easing, and that ramped up to QE1, QE2, QE3, and then it became QE infinity. It never ended. We just continued to do these mortgage swaps,
Right.
and we continued to inject this capital for years now, 18 years. I was in college, not 18 years. I'm not that old. Like 10 years now, we've just been pumping and pumping. And then in the last 3, that growth curve of that injected capital went insane, right? We were building, when we did TARP back when I was getting out of college, it was a big conversation to have a $700 million package at the beginning or something like that. And then it grew and grew and grew. This one started at $1.5 trillion. So we went from billions to trillions in just that short time period for what is a bailout package. That's a lot of money getting put into the market space. That's why we're facing higher prices. That's why companies like BlackRock were able to buy up a whole bunch of real estate, and now housing prices are up. This became a catalyst to the pains that we're feeling today. In addition, it's crazy. What should be a bigger conversation in its impact, it's kind of a sidecar, is what's happening in Ukraine and Russia because of the supply chain constraints it puts on it, it puts on oil. We had to do something about inflation. We've created it. It's a self-inflicted wound. We have to do something about it. The problem is that wages didn't keep up. They didn't have a chance to keep up yet, right? They were just starting to. Late last year, you start seeing the wages were starting. And now with where the job market is softening a little bit, the data last week doesn't show it, but if you look at all the crypto companies that have made cuts, and you see like DocuSign's probably got some cuts coming. A lot of tech has got a lot of cuts coming. It's a softer market, so wages aren't going to keep up with those rising prices. And then to fix it, the only tool they left themselves, which is kind of the only tool there is rates. Well, if we make money more expensive, then we can start taking money off of the market and balance this thing out. Well, you're triple whammying the middle class, though. Their wages didn't keep up. Everything's expensive. Jobs losses are here or coming. And now they can't get the credit for a house, a car, those things without paying more because the rates are up. And so we're a little boxed in. I don't know. I've never seen the Fed reverse on it. I mean, what they did back when we were kids was Greenspan just increased them, decreased them, increased them, decreased them. It was just like a little game like this. I don't know if a reversal is possible. Something that makes me laugh a little, just as kind of a conservative fiscal type guy, and I live in California, was that they're giving out $1,000 or $1,100 inflation relief checks. So now we're going to print more money to give relief to the problem that was caused by printing so much money. And it wasn't just us, the ECB, the Chinese yen, these all were abused currencies. So that's the part where that's this decoupling that's going to happen. It will. We coupled together. So much money was made. So much institutional money came into the space last year that it started acting like a tech stock. That's why we were running so tandem with things like the NASDAQ index and things like that. They have bad days. We have bad days. They have good days. We have good days. But that decoupling will occur at some point when I think the reality kicks in about finiteness of assets. The conversation hasn't been had about the fact there's only 21 million Bitcoin that'll ever exist. I fortunately got to talk to Forbes last week, and they asked about halving. And I was like, oh my God, thank you. Let's talk about this. We had a whole story about halving. I was so excited. It hasn't come out yet, but it was just so much fun to explain that and to watch them, because we're in the midst of a marketplace where you can see it in real life. You can see, wait a minute, there's X number of this, And every day there's more and more and more and more of this. And this isn't something that happened this isn't something that hurt people 500, 600 years ago. This is recent. You've seen it in Venezuela. You've seen it in Turkey. Right. You've seen it in, Germany in 1920, the Weimar Republic. But you see that this is a very delicate fulcrum that we're sitting on right now. And any move too much in one direction is a little scary. So I think people, though, are not thinking about this. I feel crazy when I talk about this to folks. And I think what it is people have been locked up. They have been bad news driven for 3 years. It's been bad news that they're just done. They're like, I'm getting on a flight to Europe. Call me in August. I'll be back in September. They're checking out to live a little. And I think that's healthy. But the problem is when we get back into it, these problems are still going to be there. We still have these issues, and we haven't seen, I really do think, and I was talking about inflation last year, this time when it was about 4%. And I remember I brought it up on CNBC, and they're like, inflation? And I was like, telling you guys. And look, a year later, where we're at, I think that the thing that people are missing right now is that there's some big job losses coming. You look at the value of stocks. Eventually, you have to make a change as a business owner to be able to bring that stock price back up, which means you have to cut cost. And the most expensive part of any business is people. It's the cost of their salaries, their hourly, all the things, their insurances. It all adds up to a very heavy burden for businesses. And so that's what you'll see. And we haven't had that happen yet. So I think the winter for crypto will be shorter than what will happen for traditional markets. That's what will be the decoupling. This may be a time where we distinguish ourselves from the rest of the space.
I know part of the catalysts, or I should say, that could help us decouple are things like a Bitcoin spot ETF and getting full clear regulations. And we know President Biden passed a crypto executive order earlier in the year. I know some of those reports are due coming up in August and things like that. What are your thoughts on the state of U.S. crypto regulations? It seems like we're moving in the right direction, but it's moving in a snail's pace.
That's exactly what I was going to say. You nailed it. So I applaud regulation, and most guys that are in crypto for the long term feel the same way. We're not. We need the guardrails to protect consumers. I remember 2018. You were there. ICO and madness. Paris Hilton had a coin. Trump had a coin. Everybody had a coin, and it was just chaos. We've gotten a long way from there. A long way from there, but we've got a long way still to go. And part of it is now we're sitting in anticipation of what is coming from the government. And this is typical. The .comers had to go through it. Tech had to go through it. There was, and if you remember, the tech run then it became broad strokes of regulation. Everybody was sitting in front of congressional hearings, and everybody, and now what I think they're trying to do in this one is say, hey, we've got all these agencies work together to find what the agency is supposed to look like that regulates crypto. It'll probably be something in different than what we have today, some additional division of some sort that will be around this. But there's this land grab too. Is it SEC? Is it CFTC? Who's in charge of this and who wants to be? Well, it's a pretty big market, so I'm pretty sure you want to be in charge of it. So there's a little bit of that. Now, a Biden executive order at least set the stage of, hey, we've got to have a conversation about this. And so then you saw the Department of Labor came out right away. DO was like, boom, right away we were here. But the others have yet to grow. Now, what we have to do is get some clairvoyance of procedures and rules and checklists. That has to come soon. Otherwise, what you'll have is more situations where people build something and invest in something now that may be completely looked at differently later. And Ripple's going through that right now. Obviously, They've been going through it for a few years. So, but I don't think it's going to move any faster, because look how quick it went from the month of May was all about crypto talk, in April, maybe right there. And now we're on to other issues. Yeah. Now everybody hates the Supreme Court. And now everybody we're already talking. So it's going to probably go slower because there's so many things that are happening in the world today. But, that's all right. You know what crypto guys are going to do? We're going to keep building. We're going to keep developing. We're going to keep an open book for regulators, those of us that want that, and we're gonna just help define the future. This is not going anywhere. It's resilient. It's relevant. It has defined that over the years, and I'm excited. These are actually my favorite times because I can breathe a little as a business. When it's crazy, you're just keeping up, right? You're just trying to keep everything in balance. These are the times where you can slow down and build and go, hey, what went right last time? What went wrong last time? What can we do differently? And they're my favorite times.
For sure. Yeah. This is when the builders keep building, right?
Yep.
In the bull market, it's a lot of distractions. It's pretty hectic.
It's chaos.
Yeah. So this is going to be a hard question, and it's not so much price predictions, but rather adoption and, how do you see crypto in different parts of society? And that is, where do you see the crypto market in 5 years or so?
Ooh, that's a great question. I think that it's going to slowly and sneakily embed itself into the fabric of our daily lives. Mm-hmm. So internet and email before it, right? I remember this show, remember the Today Show with like Matt Lauer, and they had the first, I think it was, yeah. And there's a clip out there, the first time they had an email address, and nobody knew what the @ sign was. They didn't know what to call it. And that was 90s. And look at where we're at today. We can't live without it. The world it wouldn't have made it through COVID without the communications that we have today, right? So it's going to slowly do that. And what's really cool is it's becoming this case study for human empowerment, which really just gets my blood just pumping. I get excited. What's happening in El Salvador, Zimbabwe, and other countries that have basically been left behind by the rest of us. They have the lowest GDP. They get a whole bunch of foreign aid, but at a cost of foreign rules like Argentina just went through, where it was like, hey, you want to do crypto? Say goodbye to the World Bank funds that you get to keep your economy afloat. That they're going to turn the table for themselves. That there's going to be this, in the 60s and 50s, there was a lot of fear about communism spreading through Southeast Asia. Our grandfathers, right? Yep. I think that you're going to watch as this crypto revolution slowly jumps to the next country and the next country, because they're all in the same boat. They all have, they've all been plagued by coups or natural disasters, right? And they've all had colonialism come in and draw arbitrary borders and they've been pushed into that banana republic life that they have in South America. And El Salvador is doing something special that's going to drive through this. And I think you're going to see, you imagine 5 years from now, that's going to become a metropolis. Their capital city is going to become a metropolis of foreign investment at their terms, not at the terms of world banks and NCOs and NGOs, but the terms of private business coming in. And I love that they're using volcanic energy, which volcanoes have taken that country out like 6 times. They're saying, you know what? No, we're going to take this energy and we're going to mine Bitcoin with it. We're going to turn the table. These things excite me because it's what I think helps democratize a little bit more globally. The Bitcoin is the people's currency if they want it. It's just a matter of where we're at in 5 years. So, and then beyond that, so beyond the monetary component, there are so many guys working on so much cool stuff that I see all the time on how they're going to revolutionize this archaic process or this security issue using Web3, now Web4, Web5. We're already having these conversations. It's going to be I think we might get our privacy back online through this. I think that'll be huge. People are going to love that. So yeah, the projects that are going to come out, it's just going to be, you're going to be like, wow, I couldn't believe I didn't think this was going to happen. You're just going to, if I could go forward 5 years, get in the DeLorean and go forward 5 years, crypto is going to be just embedded into our daily lives. And it won't be just, we won't feel pain from it. We're going to feel positivity from it. We're going to be, oh, wow, that became easier. Just like with internet and email. Wow, that became easier. Oh, that's what we're supposed to do with our lives.
Yeah, I'm excited to see how things are going to, and like you said, the different adoption aspects, because I look back, in 2017, some of the things that are happening now, I would not have imagined like that was going to happen. Right. And it looks like we're moving at a faster pace now, given that we've crossed certain hurdles and thresholds.
We definitely accelerated.
Awesome. So I got 2 wrap-up questions here for you. If you could create your own metaverse, what would the theme be about?
Oof. I mean, that's great. The capitalist in me would do what the other Pumas and those in the marketplace, the online, the shopping mall experience, something that takes I have an 8-year-old daughter, and I see her on Toca Boca and Roblox and these places, and I watch her operate. I actually sit back and just watch, because it's like my parents watching me play Nintendo. And now I know what I can do with technology. So it's just fun to watch what she does. So I think that something along those lines that's going to really capture the imagination of the next generation would be really cool. I think and then, because I don't really have any passions, I golf. I'm a big golfer. I've golfed since I was 8. I'm still terrible at it. Maybe something with golf in the metaverse. I've been working on, I had this idea. I don't work on it. Like, I just, have side thoughts in your head, but someday maybe. It's called Birdie Coin. And everybody gets so excited about getting a birdie on a golf course because you're winning against the course. And if, say, you're there, you get the coin, and the people that bared witness to the birdie get a piece of coin as well. And now that coin can be used. It can be bragged about, like, this golf course had this many birdie coins. This golf club was associated with this many birdie coins. Now you're tying the whole market together, and then people are taking the coins and they're buying rounds of golf with them, or they're buying merchandise in an online environment. That'd be pretty cool. And I think it's just going to take creative minds that know their passion really well. And they're going to say, I want to share this with the world in this way. And this is going to be the mechanism, the conduit by which they can do that.
You know what that made me think of? I do visit Top Golf. I'm not sure if you know about that.
Yep.
Where it tracks where you hit the ball, and it racks up the score, and is competitive, and you get some bragging rights from that. But if you have the coins, and like you said, you have like this token economy within that. That's pretty cool.
Gamification and tokenomics. That's really what the metaverse is going to be all about.
For sure. I got some rapid fire questions here for you, such as, what's your favorite food?
Ooh, sloppy joes. I'm like a kid. Yeah.
Favorite musician or band?
Oh, I'm one of those like agnostic music guys. I grew up like 90s kid, so like I still love Eminem's lyrics and the things he wrote about when we were kids. And so you kind of get trapped. I'm like, I realized the other day, I'm a Coast 103.5 guy now. I'm a dad now. Like, I used to go, you used to play when you were a kid, and then it got softer and softer. And now I got like elevator music going on in my car.
I'm the same way. I grew up in the 90s. I have a daughter now. So yeah, I still listen to some of the older stuff. Favorite movie?
Oh man, that's a good one. It's really documentaries for me. And anything by Ken Burns, a documentary by Ken Burns is just amazing. And it's mostly on PBS. He's done baseball, he's done Prohibition, he's done FDR, he's done all these amazing ones. So those are my faves.
And finally, favorite book?
I recently finished The Operator, which is written by a former Navy SEAL. So I read a lot of books by former Navy. I'm not a big military guy, but I'm an operations guy. And I like the way that if you're in an elite situation, this is how you have to run your operations, to use those examples, lessons. And we actually have a SEAL team on our operations side.
Wow.
And they're an elite team of people. Their job is to move money from bank to bank as fast as possible so that clients are happy. And their leader is Billy Joe, and she's actually the Master Chief. And for the holiday party, I got her a cool original women's Navy officer's cap from like the 1940s. It's in its original like old box. And so that there's a lot of great lessons learned when you have to be that elite. You have to be perfect in every sense of your operation. Businesses want to run at elite levels. And so what better way to apply those things? So that's my thing.
Chris, pleasure chatting with you. Thank you so much for joining me today.
Hey, thanks for having me. It's been a real pleasure.